What's going on, everybody? Just felt like talking about the markets a little bit, so this one's just kind of be a little bit of a rant. I'll share some data with you here, but recession or no recession? What do you think? Remember, when you think about a recession, which inevitably we are going to find out we're in a recession, right? I think we all know that. That's fine. But remember to disconnect yourself from the stock market in terms of a recession, meaning disconnect the economy and the stock market. They're two different things. I've shown numerous times in our wine and wealth classes where you would be in a recession and we find out that the stock market was already 80% of the way through its decline and getting ready to start bouncing again. So it's tough sometimes because you think recession and you're like, oh my God, that means the market's going to fall. We've already fallen, right? We may go further, but we're already in our down move here. So the real key is, all right, if we're in a recession, news is bad. There's really not a lot of good going on. I'll share some things with you. But all right, if everything's bad, then we're just looking for things that could be good news to help turn the market. What is it? You might argue that the Fed cutting rates or raising rates more aggressively is good news. I don't know. We'll see. But, you know, that's how you want to look at it. So I'm looking for that good news that says, well, now I can dip my toe in the water. I can take part of this 22, 23, 30% discount and feel good about putting some money into it. So I was just looking around and I thought, you know, make a video out of this. Why not? Here's consumer sentiment. If you haven't seen this, check this out. And I don't mean, this is just sort of an impromptu video. Consumer sentiment, it's actually a survey that they do. Pretty great survey, actually. It's not maybe of the most amount of people you'd ever want to survey, but nonetheless, I think it's pretty cool. Here is looking all the way back until when many of us were not even born, 1950. See it down here? Consumer sentiment. When it's low, sentiment is low. When it's high, sentiment is high, right? So right now, people are pretty bearish. They're not very optimistic. They're not very excited about the future. This is the lowest number we've ever seen. So why? What's the deal? Well, inflation, energy, gas prices. Maybe you like the president, maybe you don't. Maybe you like the policies, maybe you don't. Maybe you're scared of the midterms coming up and you go, oh my gosh, I don't know what's going to happen. So nonetheless, sentiment is really, really low. The good news here is, and this is going to take me a second to situate because I'm going to do this on the fly. When consumer sentiment is low, let's try 2000, the stock market tends to be near a bottom. So this doesn't show great. Here's the COVID's drop. So here's the consumer sentiment, purple, during COVID, and the stock market fell, but we were very close to a bottom, right? You can look at the last time we were in a recession and we had consumer sentiment this low. We were getting close to a bottom, but we still had about another 10% left in the stock market, see? So as consumer sentiment hits a low, we are not on the verge of a rollover in the market. That's just not the case. There's only 2005 and 2011 are the only times where you would have consumer sentiment at a low where there was no real movement in the market, right? Nor did we hit a recession. But nonetheless, we're likely in a recession here. The other thing is this retail gas price. My data just stopped keeping up. And I'm not joking. It just stopped keeping up. So it was at 4.9. The national average for gas shows me $4 and basically 98 cents. We're over $5 now, and this thing just stopped. It's almost like $5 was its ceiling, and it won't report anymore. It's probably just delayed or something, but you know, we're not going anywhere until gas prices start to relax a little bit. What's kind of interesting about this is I'll show you, maybe teach you something here. So this is actually not horrible news just yet. I mean, the fact that we're paying that much is very horrible news, but check this out. If we go to the inflation rate, we know it's off the charts, right? You get that. But let's put in core inflation here as well. I think I got that saved. So you know what core inflation is? And they make a big deal out of this on TV. It's really simple. Inflation is all things that can drive inflation or deflation. Core inflation says take out energy, gas, and take out food. So core inflation is everything besides those two items. Because food prices can vary wildly. There could be chicken virus outbreaks. You've seen this happen. Mad cow, right? It's not funny, but there are things like that that can happen. So food prices can go all over the place. Jif, they just had their issue there with the peanut butter. And energy, of course, is driven by like global changes. One guy in OPEC could say something and you could see wild price swings. So what's cool is core inflation, taking out those two volatile items, is actually starting to pull back. Do you see that, though? Do you see other things out there getting cheaper? I don't see it yet. I mean, I see the number falling, so that's good news. Maybe we've peaked. We certainly have not peaked because of energy and gas prices and food. But this is sort of optimistic, right? The fact that core inflation is pulling back. I don't see it yet in my normal everyday life, but I'll take their word for it for the moment. So, maybe that's a forcing of I'm looking for a good reason to want to buy more and more and more. Kind of forcing that one, but that's at least a little glimmer of hope. Real average earnings. This is not a good sign. Average hourly earnings is something that's tracked, actually, and we follow this typically right along with the inflation number when they come out. Average hourly earnings are severely and very rapidly declining there. Not something you want to see when inflation's going this way. We can handle more inflation if average hourly earnings are higher, people can afford to pay stuff, we have low unemployment, which we actually do, and so you can handle that. We're going the wrong way. Hourly earnings are starting to move sharply and quickly, moving lower. So there's just a couple things to point out there that, yes, we're very likely in a recession already. I mean, I don't think that's news to anybody, but remember to disconnect yourself from the stock market. We're not talking recession stock market. We're talking recession Main Street economy, right? So the stock market will and always has bounced during a recession, right? I've shared that in our Wine and Wealth classes too. Like how often, if you were to say, oh my God, it's a recession, I don't want to invest, how often would you have missed the bottom? It's every time. You missed it every time. So we just want to find the opportunity. When we're in a recession, we want to find the opportunity. Maybe now's not the time, but when that time comes up, we need something to pick on. We need something to justify, right? You don't invest in crypto because your friend told you, right? You justified it yourself. You found out something that made you want to invest in it, right? You didn't invest in Celsius and say, oh my God, I'm getting these high interest savings here, only not do any research, right? So as a fund manager, I need to justify an investment. And I just don't have it right now. I have a reason to just nibble, I would say, discounted pricing, short-term extension and all that. But I don't have a reason to say, that's the moment, right? Great. We are within a good margin of error to say this is the bottom, not only for the stock market, but that maybe the worst is behind us economically. So I wish I had better news for you. And I'm not trying to sugarcoat it or anything. I'm looking for opportunity. And I'm just having a hard time finding it. So if you find it out there, let me know. Otherwise, we'll let this play out. Nasty, nasty day today. But keep in mind, the stock market now is so extremely extended that now we get that bounce like we saw last time, right? You get so extended to the downside and the market bounces purely because it's extended. There's no good reason. Remember, when you see this market bounce maybe through the rest of the week or whatever, there's no good reason for that other than we're just extended in the short term. That's it. And you could maybe buy into the Fed rates thing, but I don't think people are doing that just yet. Yeah, that's it. That's all I got for you. This is kind of impromptu, like I said. I appreciate you hanging out with us here, and I like doing these sort of things where they're less structured and I can just talk sort of ad-lib like this, but what do you think? Boring? Maybe do more of it? I'm going to do something from home or something? I don't know. I'll think about it. I'll see what you guys say. See you.